right, so 45 minutes, I should be able to talk a lot about that time. But so I already introduced myself a little bit, and I think it's always great to also share a little bit of your Web3 journey, kind of your crypto badge, if you will. So I got into Bitcoin in 2014. I learned about it in 2012. I was driving down 101 in Silicon Valley, and I saw this huge sign that basically just said Bitcoin, and I was like, what the F is this, right? Started looking into it, watched a lot of documentary, read some books that you guys probably all saw as well. But then I was at Plug and Play, and I was at a startup. It was called Nor One, and there was a pitch event, and it was a Bitcoin ATM, and I was like, what the heck is this? So that's how I fell into Bitcoin. That's how I learned about blockchain technology, and ever since been investing in not just crypto but also Web3 projects. The last big investment I did personally was a startup called INX, and what they do is they do tokenization. It's slow going. They actually were in stealth for about 390 days before they actually came to product. But what's really interesting is that they're helping public companies take a slice of their equity stock and then tokenizing it. And then they also help startups that has a large ecosystem raise in a non-traditional way so that you can raise through kind of like an evolution of ICO, if you will. But in any case, so personally, I've just been very interested in all things Web3, really interested in things like, DePIN, decentralized physical infrastructure stuff. I think there's a lot of application into the travel and hospitality industry as well. So, all right, my talk, about a month ago, I had a call with Luca and Beat, and it's like, okay, what should we talk about? So I wanted to kind of craft this so that there's benefits for everybody, early stage startups, investors, suppliers. So there's a little bit of everything and a little bit of my personal predictions, if you will. So from venture capital to corporate innovation to Web3 traction and a little bit of Gen AI is the thesis, the idea of the topic. And the reason why I'm going through this is because what I'm really trying to do is leverage a lot of my personal experience, professional experience from having been with a startup accelerator in Silicon Valley that specifically works in the travel space and also works not just with startups, but work with corporates. So corporates that I work with that is in the innovation space are like head of innovation for TUI Group, Airbus, hotel companies like Accor, GDSs like Sabre. And typically they have their digital transformation, their innovation strategies, and they come to us at the time when I was there is they have a problem statement and they're looking to see if there's a startup that can solve their problem. So I go through a lot of, okay, what is this company? What is their problem statement? Okay, what are some of the startups that can solve this? And then connect the dots, if you will. So I did that for about 4 years. All right. And just to say, I'm really excited to be here as well. I was here on the last conference in Barcelona, but personally I made the mistake of not allocating enough time because I had done a few conferences before I went to the one in Barcelona, so I had to leave right away. So this time, I'm really glad I got invited back, so thank you, Luca and B, for inviting me back. All right. So, venture capital landscape. This is the current venture capital landscape from a global perspective. Is it just flashing? It's okay, I wasn't sure. Okay, well, as long as it doesn't change slides on me already, but in any case, here you can see that innovation travel, it's been fueled by VCs and CVCs globally. There's a few sectors here. How many of you guys are aware of CVCs, just out of curiosity, and what they are? Okay. So CVC is corporate venture capital. So we have traditional VCs, traditional venture capitals. There could be generalists, so they invest in different sectors, right? And their sole focus is, that's their core business model. Investing in startups in various stages, particular sectors. And then you have CVCs that's very specialized because, let's say, for example, I used to work with JetBlue Ventures, and JetBlue Venture is the CVC arm of JetBlue, and they focus on specific innovation solution that can impact their business now and in the near future, right? So you have, for example, a few ones like Alaska, Delta, Marriott, and so forth. They all have CVC arms. And this is super awesome for startups that is focused on a specific area, because you can also look into potentially having market validation going through these CVCs. And if they invest, then that's also a signal for other VCs, because if on your cap table you say, hey, JetBlue Venture invested in us, and then B is going to be like, oh, they did our due diligence. We're not, so it might be a little bit de-risking, if you will. The thing about this slide here is, now I spent a good few weeks digging into some of these CVCs and VCs portfolios, at least publicly announced portfolios, and you can probably imagine less than, I would say, 1% have capital allocation specifically for Web3 travel. So earlier when Luca was talking about, Anthony, the room, the empty seats, I kind of really think wow, we're very aligned, because my thinking is exactly the same thing. There's first mover advantage for Tetris right now, I think, because you have traditional VCs and CVCs that's very focused and specialized, and they will look at a problem space. They'll look at your product market fit, your addressable market, and so forth. But they're not going to really say hey, how are you using Web3, and how is this going to be impactful, right? So I think what you guys are doing with Tetris is super awesome, and I think that's really going to fuel the innovation in this space, and hopefully travel or trade travel. I think, Luca, you coined that term when we were on the call, trade travel, traditional travel. I think traditional travel is going to look back at this conference and this event and see this is the catalyst of the innovation in travel for Web3 specifically. So, a lot of these venture studios, startup incubators, accelerator investment funds, they really don't have dedicated people that is versed in both travel and Web3. And that's why I think this is super exciting, this event, this conference, and what Tetris is doing. All right, this may or may not shock a lot of you guys, but most of you, because you might invest in crypto, have also recognized this because you are investors as well. But the VC landscape is changing, or has changed. You know how macro environment affects us in terms of crypto as well, right? Some of you guys felt the pain, maybe if you didn't hold, but you might have felt the pain with the yen carry trade, and some of you got what is the yen carry trade? Some of you guys pay attention to the US Fed Reserve, and when we raise interest rates and how that impacts us, and the change of rates and how that impact crypto prices, right? Because changing macro conditions with higher interest rate essentially means capital isn't as cheap as it used to be. So VCs also recognize that, and when they allocate capital to startups, they're a lot more discerning. It's not as much of playing roulette and placing a lot of bets anymore, right? The due diligence is deeper. They look at the value proposition more. They look at your adoption, your traction, your market penetration, et cetera. So if you kind of just look at this chart from 2021, 2021, early stage startups did really well. They raised pretty, in terms of if you slice this down into little sections for, pre-C, C, Series A, all the way to Series F, early stage startups did really well. But overall decline is about 40% year over year since 2020. So macro conditions affect venture capital's mindset into how they invest. The good thing is that, let me see if I can change this real quick. Sorry, give me 1 second. Here we go. The good thing is that this isn't just the travel sector. The decline in capital allocation is across industries as well. So the trend of the decline isn't just because VCs are looking at the travel sector and saying, oh, we need to de-risk travel, we need to allocate capital more towards Gen AI, which is a little bit of the thing as well. But give me a second, I'm trying to move this mouse, and I just found it. Here we go. Okay, so did it change? So one thing here in 2023 that's super important to note that I didn't get a slide to, but I did get the numbers on it, is that in comparing to 2022, 2023, Series F, the later stage startups, like high growth startups, the likes of like Hopper, for example, they received 20% more allocation in terms of VC funding. So essentially the point I'm making, the takeaway is VC funding is shifting towards more into late stage, proven, less risky startups versus early stage startups. There is good news though. 2024 it's not over yet. We're second half also over, but we're looking at a projection about 0.5 billion more compared to last year. The thing is, you look at the number of dollars going into venture capital, going to travel from venture capital, but you also have to look at the number of deals, right? So if I'm a VC and I'm investing, let's say I have a fund that's $1 million, I might not invest as heavily into early stage, I might invest into later stage, but then I'm also investing less, I'm placing a lot less bets. So right now, the projection is that there's a little bit more money, $500 million more going to 2024, but 30% less deals. So less bets, a little bit more money. All right, so what to watch out for? And that's the next slide. Oh, yeah, here we go. I grabbed this slide from Skiff Research because they did a really good comparison with their data with Crunchbase, which is a startup database, Federal Reserve economic data. And what I thought was super interesting was this point right here is that if you keep in touch of the US Fed Reserve point policy, right, into the Fed rate funding, every 0.1 decrease means VC's mental wallet is increased by 50 million more. So the big takeaway is keep an eye on the US Fed system, and hopefully I think September they're gonna drop the rates. They're gonna drop rates a little bit more for 25 and 26. So the big takeaway I would have for any startup in the room or even VCs is the environment is changing from 23 to 24 in a decline, but with the Fed interest rate decrease going into 25 and 26, the mindset is that there's going to be more capital allocation, might be a little bit riskier as well. So if you're not raising right now and you're looking to raise in 25 and 26, but you're starting to network with industry players, with venture capitalists, et cetera, you really do want to keep them in mind of you and what you're doing. And one of the great things that I love getting is updates. So when you have a conversation with a startup, let's say, as a mentor, advisor, investor, et cetera, really good founders will send you monthly updates, right? So they'll send you monthly updates to let you know what success metric that they were targeting and they reached, right? They will give you summaries of any strategic partnerships, any ups and downs in terms of their business model, what they're doing, how they're executing, hirings, et cetera. And even if you're not an investor, but you're exposed, like say you had that first initial introduction call with them and they keep you in mind, they give you this information, it's really, really important, I think, to keep that relationship going and to really show the VCs you're executing. All right. Yes. Personal projection or? Oh, I see what you mean. Yeah, that's a really, really good question. I don't have the answer for that. I can look into it because if I try to give you like an estimate, it's gonna be like my sentiment analysis. But sentiment analysis, based on my experience at Plug and Play, just to see when the rates were raised, it was very fast. Because even you, let's say just as a regular consumer, If you're aware of the macroeconomics, a lot of friends of mine that invest in crypto, they get orange pill into crypto, and then they all become macroeconomists, right? They start learning about what is hard money, right? How does Bitcoin impact that? And how does the government work? The Fed is printing money, and how does inflation work, and so forth, right? So like my group of friends, we talk about that stuff, and it translates very quick. So everything, for example, I remember having a chat with my friend. They're talking about, oh shit, the Fed is raising rates. So in a month, my credit card interest rate just got increased, right? It's more expensive to go buy a new car because their interest rate is higher, or your real estate interest is higher. So I think VCs are very quickly in tune to that as well, and they know like about cheap money. And I think that's also, and we saw a little experiment of this, if you will, or example of this, is the yen carry trade. As soon as when we saw signals of that, and the first signal was when the U.S. Secretary of Treasury, Janet Yellen, went to China to, okay, I'm gonna digress on that stuff. But I think a lot of people, if you don't know about the yen carry trade and how that affected equity prices in the US, and then in turn affected crypto prices, and then why crypto rebounded so fast, I would definitely suggest you digging into that concept of yen carry trade, because essentially investors went to cheap money in Japan, borrow cheap yen, and then use that to invest. And then when the Japanese treasury increased the rates, then the investor, they're like, holy shit, it's not cheap money anymore. I actually need to like pay back, and I have collateral. I need to sell some stocks. So a lot of stock prices drop. And okay, so I digress again. All right, so we'll play a little game just to kind of get everybody into the mindset of where the money is, right? This dates me. How many of you guys saw this movie? Yeah, good movie, right? See, I do the same thing, Luca, with movies. Okay, so 2023 specifically for travel and hospitality, startup investment was 722 mil. Not a lot comparing to 2019, 2022. This is the share by country. So these are countries. I just took the top 5. And then we have the share percentages on the side. Anybody want to take a guess which country took the top spot at 25% share of 722 mil? Okay, that was the easy one. How about, okay, so that was the easy one. Number 2, second spot. Unfortunately, no, and I can talk about that too. Unfortunately, no, but I can talk about that too. Italy took the second spot. Compared to 2022, I think Italy moved up by 2 spots. All right, so the next one, Singapore. Anybody want to guess the 4th one? China's not on this map. and China historically have not been big VC investors. And especially right now, the China economy is tanking. They're having a major real estate crisis. They are having a major banking crisis as well. So yeah. All right, so the last spot, the 5th place was, nope, unfortunately not. So this country actually moved up 3 spots from 2022, which shows that there's a lot more interest in venture capital risk taking from this particular country. India. And I've actually hosted a few of the families in India when they came to Silicon Valley. Japan was a heavy player in the last few years. They still are, but they kind of took a few steps back. But with India, they're really trying to look at innovation to boost their economy. A lot of these countries, they look at investment, or a lot of VCs in these countries look at investment and not just like supporting the innovation ecosystem, but it's also business development opportunities, opportunities for, job, employments, and so forth. So, All right, that was fun. So now we all know Italy was in the second spot, and maybe next year Italy will be in the first spot. Okay, so corporate innovation themes. This is an aggregation, if you will, of the last few years at Plug and Play, working with a lot of corporate partners. I didn't really dissect these into specific sectors of, aviation, airlines, airports, hotels, and so forth. I try to look for commonalities. After COVID, you might have guessed it, ancillary revenue, operational efficiency, any innovative solutions in that space they want to look at, even though if it doesn't hit their problem statements immediately. Because after COVID, it's all about how do I make more money? How do I save more money? And there's been a lot of really good innovative startups that came into this space, especially on the ancillary revenue side, that also had to play with fintech. A lot of fintech solutions, buy now, pay later, cancel anytime, so forth, was super interesting. But for ancillary revenue, there's a few that I really like because I was a user before I even knew that they were like an early stage startup. How many of you guys heard of Resort Pass? No? Resort Pass? So Resort Pass to me was just like, holy crap, if I was a hotelier, this is a no-brainer, right? Because I have services at my hotel. I have a spa, I have a pool, and I can go on resort. Let's say you can go on Resort Pass and you can buy a day pass to access the day spa. And what does the hotel have to do? Nothing, right? They just make extra revenue. And Resort Pass, they actually have like a little back end too for a little bit of revenue management in terms of like availability, inventory, and so forth. And then I started looking into like how many of these like passes are there, and it's amazing. There's parking pass, where hotels basically near airport hotels, you can go to the platform and pay 50% less versus airport parking and park at a hotel's parking lot and use their shuttle to take you to the airport. I was like, okay, I'd rather do that. That's awesome. There's another one called Class Pass. Basically, it's like a decentralized gym spa membership. You have Class Pass wherever you are in Bali. You want to join a yoga session, you want to join a gym, etc. You're not a member of the yoga or the gym, but you can use that to get day passes for all these places. So those are some of like really, really interesting ones. I mean, even operational efficiency one, you can think about, all kind of use cases, in the travel space, call center operational efficiencies, or airports are using AI, machine learning for operational efficiency in terms of like passenger flow management into, for example, runway debris field detection, automation. I'm not gonna talk about specific airports that we worked at or worked for, but there's some really innovative solutions a lot of these airports are doing, especially the ones that want to stay on top of the list in terms of the best airport in the world. So, all right, let's see. I'll talk a little bit about customer engagement and loyalty on the next few slides because I kind of want to focus on that a little bit more. But some of these other areas, I kind of categorize in short-term, medium-term. Sustainability had a major focus in the last few years as well in both like hotel world, airline world, airport as well. So if you look at hotel, there's all kind of stuff like, building energy management systems. You have innovation in food waste management. There's a late stage startup called Winnow. Anybody heard of Winnow? So last year I hosted 2 startup pitch competition. One is in WTN in Dubai, and then another one was the hospitality conference in Riyadh, Saudi Arabia. And we invited Winnow to the pitch, which in hindsight, it was kind of a mistake because all the other startups, they're like, you really shouldn't have invited Winnow. They're like late stage, they're really growing, But I love what they do because it's, I'm passionate about sustainability as well. But so essentially, Winnow, they have a hardware software solution using AI and machine learning. So imagine you have like a hotel restaurant kitchen, a cruise ship, let's say kitchen, and basically what they do is that they have an intelligent scale system with a camera system, and every time the kitchen throws away food waste, they detect it and they measure it. They know exactly what it is. So you threw away, 3 kilos of corn, etc., right? So they provide you analytics, but they also provide you with course correction. So the chef will get a report to say, hey, if you adjust this on the menu, etc., or this ingredient and so forth. And what's been really interesting is there has been solid value prop delivered for a lot of the pilot hotels that they worked with. So they're growing really fast. Anyways, yeah, sustainability goes all the way through. If you talk about airlines, there's like sustainable aviation fuels, etc. I can talk more about fintech and all this stuff later on if you guys have any interest in any of these areas. But I think in terms of like Web3, connected trip, I think it has a lot of use cases for. Some also will talk about SSIs or digital ID managements. Okay, so I have a little bit of time. I'm gonna move a little bit fast here, but for me, I'm really paying attention to the loyalty space for Web3 because there's a huge amount of traction for it, because there is a lot of pain points that's being solved for loyalty. And investors really like cross-industry platforms because it has a much larger TAM, right? Their total addressable market is not just the travel space, right? They have brand and retail. They have fintech, for example, right? So I'm paying attention to this because they're adopting Web3 technologies into this space because it's solving a lot of problems. And I'll give you some really quick stats, and obviously, let's see if I can pull this up real quick in my notes so I'm not giving you the wrong numbers. And I'm losing my mouse all the time on this, so give me a second. All right, some pain points. So, airline loyalty participation dropped from 2019. Airline loyalty participation was at 66% in 2019. 2023, it went down to 52%. So there's a lot of disloyal from the airline and the air side. If you are a Chase Rewards credit card holder, if you will, their liability on the books in terms of how much money. So like when you accrue points, it's actually a liability on the bank balance sheet, right? So in 2022, it was $11.3 billion just for 2022. In 2023, it went up to $13.2 billion. So banks are also looking for ways to get consumers to use these points as fast as possible. And that's why you're seeing a lot of banks working with travel. So Capital One Hopper is powering Capital One, right? There's a lot of like partnerships and strategic partnerships happening. And just from a global perspective, loyalty points that's unspent on an annual basis is $30 billion. So, how many of you guys know about Vatom, this company? They used to be called One-Off. Vatom, V-A-T-O-M. They did a name change. Have you guys heard of One-Off? So their tagline is the platform your metaverse is built on. The CEO, co-founder, his name is Eric Puller. Have you guys heard of Eric Puller? So he was coined to be one of the first in 2019, a programmable smart NFT. So he was one of the first players to play in that space. And since then, I think his platform has distributed like 30 million NFTs across brand and retail like Nike, Adidas, Pepsi, etc. So they're growing really, really fast. And what I love about, if you go on their website and you just look at what they do, they don't really talk about Web3 technologies. And some of these startups as well, and I just pulled up 3 as really good examples. So Uptrip, Pete, do you know Uptrip? Yeah. So Uptrip was kind of incubated with Lufthansa Innovation Group, and is basically a huge experiment with Lufthansa Airline Group to go into kind of like the digital. Think of Pokemon cards, right? Collecting digital NFT cards, and then the utility of it is that you get like upgrades, for example. A really good NFT application in terms of airline utility. If you look into Air Baltic's NFT called Planey, super awesome, very innovative. When I talked to him, when I talk to them, one of the things I love is that their CEO actually go to these NFT conferences to learn about the latest technology, which I think is super awesome as well. But here's a few takeaways from the traction that I've noted is the first one is you'll if you go and take a look at SuperLogic, Smart Media, investors are looking at these platforms because they are cross-industry, right? So large TAM, large pool of strategic partnerships, customers. They also help bridge the gap between Web 2 and Web 3. So it's not a disruption, right? They're helping them cross the bridge. So in the Valley, one of the things that we kind of talk about is Web 2.5. So companies that can bridge the gap. And what they really do now is, especially SuperLogic and Smart Media, is that they also pivoted into having BI intelligence for NFTs. So kind of think about like having analytics. So if you're Nike and you have an NFT program, you need business intelligence to track and tell you like all the success rates, fail rates, adoptions, et cetera. Because like a lot of these NFTs, you can have like metadata built into them to be able to track a lot of the experiences. So I think a lot of these are super cool. All right, I know I'm sure on time. How much time do I have left? Okay, I can probably go through the rest pretty quickly. So I brought up this example. So I'm shifting gears now into Gen AI. So I brought up this example. This is TNMT. This is some of the Gen AI use cases as well as the startup in that ecosystem. I'm obviously not going to go through every single one, but I'm just raising the awareness in some of the key use cases that startups are going into. So heavily into trip inspiration and planning, heavily into customer experiences. Okay. What I really like about this one from NFX is kind of the Gen AI spectrum. For anyone in the room, you can kind of look at this from like an investor lens. When a startup pitches or you see a deck, you kind of want to understand like how exactly are they an AI company, right? Because some startups are juiced by AI, right? And some are AI first. And in 2022, we had a startup batch. I'm not going to name the startup, but we had a startup batch that just finished that particular accelerator program. This is before ChatGPT in January popped into the scene. And I kid you not, within 2 months, I got a refresh deck from at least 3 startups that basically very quickly incorporated ChatGPT into their product set. So that was, that's how quick that, not just in terms of like the adoption of Gen AI, but like how easy it is for any company, startup or big tech to go into it as well. So, and one thing I wonder is it possible to have something similar for Web3, or like a Web3 spectrum? Like, are you a Web3 company? Are you a Web3 first company? Like, does your core product and services can only exist because you're a Web3 company? Or are you a traditional Web2-ish company, but you're incorporating a crypto wallet, let's say as a plugin or something like that, right? So that would be, some interesting conversation that we can discuss. And also, why it's moving so fast. I did an innovation day for some big companies, suppliers, technology companies, and et cetera. And one of the things that they really wanted me to talk about is Gen AI and the adoption of Gen AI in the travel space. And if you talk about, okay, Gen AI, 2 years, wow, super fast adoption. Here's the thing you have to think about is AI has been in the game for a long time. We've had AI, we had chatbots, right? So it's not like, a quick, like, this new thing, right? So when the technology allowed for this major adoption, then you see big tech jumping on, evolving their platform to cater to their existing product and service, as well as, allowing for innovation. So AWS, they now have a specific Gen AI for travel and hospitality. I don't know if you guys heard of the Bedrock, AWS Bedrock, super awesome. It's got like, I think, well, this is a year old, but about a year ago, they had like 8 different LLMs as part of their overall AI. So like if you're Marriott and you wanted to launch an AI program and you need a holistic, everything from text to speech, text to audio, text to video, or whatever, they can do it. So really cool. Sabre launched an AI program as well. Opera, didn't say really good things about them last time, but Opera Cloud, they're centralizing, and their Opera hospitality integration platform is also super awesome because it allows startups to access hotel data a lot faster. So I can talk a little bit more about that as well. All right, just for the next few slides.
Maybe there's a sound, maybe there's a sound from you mute the sound. Something from the beginning.
Oh, yeah, I see it.
Yeah,
Let me see. No worries. It's the alarm. Okay. I won't go into every single one. I can share all the links, all the research if you guys are interested in looking a little bit deeper into some of these things. But I just wanted to surface this to bring it to your attention, into like kind of your awareness space. But there was a session that was done by the Google Cloud team about 2 months ago, and I grabbed this slide, and I was just like, okay, this is awesome, because Google Cloud, they're looking at the intersection of Gen AI and how it can play into the Web3 space. So that's super awesome. This is some of the use cases they have. There's probably 3 or 4 that you look at it right away, and you can see like there's application for this in travel, right? So I'll skip through that. The thing that I'm most excited about right now is agentic AI. How many of you guys have heard of agentic AI? Agentic, 1, 2, 3, 4. Right. So talk about AI agents essentially being able to plan and execute a task end to end. I'll give you a really good example. Gen AI right now, you can do like text summarization. So if you're a customer experience call center, you're like, hey, write me a script for X and Y, Z scenarios, right? So your call center agents can just have these scripts, and then based on the responses of some traveler that's complaining, it can generate like text and scripts and so forth, right? Well, agentic AI agents can actually do end-to-end problem solving. So it can actually solve the problem. It can actually plan, execute. So to me, I'm looking into this. It's super exciting. So essentially, you can have all of that happening. And how many of you guys caught this? Brian Armstrong just posted this on the 30th of August. So yeah, so Coinbase Dev Conference, right? They did like showcase one of the first AI agents having crypto transactions, and that like immediately I was like, okay, I've been talking about this for the last 2 years, because one of the talk I did was for a travel company in Switzerland about metaverse, having AI agents in the metaverse, and then being able to interact with each other, interact with us, and then also transact.
Mike, I think the time is over, but this is too interesting. Can you continue a bit later with this?
Yeah,
How many
for sure.
slides do you have?
That's it. That was my last one. I wouldn't.
You want 5 minutes more? You go ahead. Yeah.
No, I mean it's fine. So what I'll do is I have all the resources here to share with everybody, where I can just give you the deck as well. You can kind of look through this. But like one of the things I think super awesome in terms of agentic AI, if you really don't know as much, is like you can have these agentic AI systems, and their core logic can be designed so that they can have human in the loop, but you can also have them access other large language models. You can have them access APIs so that they can do executions, and it's mind-blowing, some of the demos that I've seen, and this is just the beginning. So I guess the point I'm making is, you see Gen AI in terms of the adoption for consumers like us. You guys probably all have some kind of a Gen AI tool on your phone, right? Like, how many of you guys use like Pi, for example? Anybody? Pi? Okay, if you don't have Pi, download Pi.
Tough crowd.
yeah. I mean, probably like, Expedia has ChatGPT. You have other, like I have like maybe 4 or 5 AI specific apps on my phone, because I'm constantly playing with it. But then this is the evolution of it, right? Like, so I'll give you a travel example. So with ChatGPT, like earlier I said like, okay, you could talk about like customer service support, but let's say from a consumer perspective, you can say, I'm going to Bali for a month. How much sunscreen do I need, right? And then ChatGPT will probably like bring a tub of sunscreen, like. But with agentic AI, what it's going to be able to do is it's going to be like, oh, okay, we're going to look into the weather. And then when we look into the weather, we're going to see how much is the average sun exposure for the island, the period that you're going to be there. And then it's going to look into, how much the size of lotion or the size of sunscreen, how much can you carry on a flight, how much can you bring, how much. So like it can go through all this planning and execution and then do the recommendation. So it's very end to end. And I'm just really excited about it because of the fact that it's so early and it is one of the hottest thing in the Valley right now. Gen AI moved very fast, the adoption moved very fast, but now you're gonna see agent AI. So agentic obviously is agents. And then if you look in the travel space, just look at how many titles got the word agent in it, right? Reservation agent, travel agent, front desk agent, et cetera, et cetera. So I think there's a big play in this. Hopefully, like if my mind is in the right place from like a personal investment perspective, I still think there is the metaverse. I still think there is going to be agents in the metaverse. I think it's going to be super human natural for an interaction perspective. And I think these agents will be able to execute and plan and also transact. So that's
Mike,
it.
we have a question. If you guys don't mind, 5 minutes more. It's okay. We have 1 hour for lunch, but it's just a sandwich. So a question, then we go.
Yeah, it's not going to take 5 minutes. So AI is AI, and this is kind of parallel to the Web3 and crypto space. So the question is, do you see a strong correlation between the development of all these Web3 with the price of crypto, Bitcoin, the next bull run? So if we get the bull run in the next 6 to 12 months, do you see an acceleration in all these, or the correlation is not that strong?
Yeah, that's a great question. I asked myself that in the last few months, and I'll tell you exactly why. So personally, I think a technology like AI is going to benefit adoption of Web3, right? I think there's a confluence of the technology, the intersecting. So when you have use cases, investor interest, et cetera, adoption, let's say, of AI, and that AI just happens to need to use Web3 technology to execute, so agentic requires accessing a smart contract, right? How many of you guys know about Fetch and Ocean?
Yeah.
So what are those projects for?
AI,
AI,
theory.
right? They're AI crypto projects, right?
Cash as
Right.
well.
And do you know what they're doing with IPFS, with like Filecoin,
Yeah.
et cetera,
Like
right?
decentralizing the.
So there's so much VC interest in that space because they realize like, hey, they're not saying like, oh, these are Web3 crypto tokens, but like these are, the way we look at it is, I personally look at them not as crypto tokens. I look at every single crypto that I invest in, I evaluate them as startups, right? So they're like startups basically. So like if I put money into Ocean or Fetch, it's not like, oh, look at the price action, it went down 20%, buy the dip, right? No, I like to read the white paper, I like to understand the market space, I like to understand what the use cases are, not just for the now, but for like 3-4 years and so forth. So like for me, I definitely think like the intersection of AI as well as crypto or Web3 has a lot of relevance, and I think that is going to fuel price action. And I think it's not just going to be like, oh, Bitcoin's going up and the rest is going to follow, right? Sure, you can play like just Bitcoin only, right? Or if you're like investor looking at these projects as startups, then you're looking at it from a different lens and not just from like a price action lens. So like when I got into investing in crypto, I was looking at it from my mobile and cloud adoption phase. So like when mobile came on, what happened? And when cloud came on, what happened? So I was looking at projects that was like doing data storage, data processing, data integration, and so forth. Because in Web3 world, you're gonna still need that, right? So it's like infrastructure. So like my thesis at the time was infrastructure. So I was looking to invest in crypto projects on the infrastructure side. But now I definitely focus on the AI side as well because I'm also riding the train, right? The last few times. Yeah, okay, sorry, that's
Thanks.
it. Yeah.
Thank you, guys. So thank you, Mike.